Yeah, the financial markets have been looking at this as an increasing area of uncertainty. When the polls were widening up until about 10 days ago, I think that the markets became a little bit more confident and therefore started pricing out some of that risk. But subsequently, we've seen some closure in the polling, both online and also in the phone polling. And as a consequence, that's led to the uncertainty creeping back in. So we've seen some sterling weakness on the back of that because the vote is more uncertain. And we've particularly seen that weakness against the US dollar and to a lesser extent against the euro. So we are seeing the pound weaken. The betting markets have been, broadly speaking, the same all the way through, which is about a 70-30% weighting for a Remain vote. But it's certainly not widening out, and so that uncertainty I think will remain until we get to the vote on the 23rd of June.
Does RBS take a view on whether it's better or worse for the United Kingdom to remain in the European Union?
No, we're absolutely neutral on this. We're not taking a position. I think that's what one would expect of a major organisation or financial institution.
We've talked about, obviously, the pound probably weakening further. Although RBS has to remain, you say, a neutral observer in this, you have to also make your own analysis of the economics and the arguments one way and the other. What's the nutshell analysis of Remain versus to leave?
I think the analysis is that as far as Remain is concerned, we sort of know what we're getting there. And as far as leave is concerned, we don't. We don't know what that looks like, whether that's positive or negative. And so I'll just go back to this point about the uncertainty. There is greater uncertainty, mainly because of how the markets currently view the risks and view the likely result. There's greater uncertainty surrounding a leave vote. Now, that's not to say that it's negative, and I want to make absolutely clear that we're not saying that that's a negative, but there's just greater uncertainty surrounding it. If you look at the options market, there are more contracts being placed for a more sizable fall in sterling's value than there are for a sizable rise in sterling's value. Again, that might be down to the economics of it, though. The economics don't look particularly good for the UK at the moment. Those big twin deficits that I've already spoken about with the current account and the fiscal deficit. And so there are more of the market participants that are betting on a larger fall in sterling than they are betting for a significant recovery.
And if we localise it to Gibraltar, which of course is voting in that EU referendum, there's a different dynamic in our polls here.
Yeah, I mean, for Gibraltar, there's the issue of sterling and sterling's value and how that will affect trade. And a lot of goods for Gibraltar are imported, and so it may well have an effect on pricing for Gibraltar. The interesting thing is that there's a huge difference between the polls here with regard to Remain versus the Leave camps, where I think it's about 80-20 in favour of Remain. There's a business poll done by the Chambers talking about 85-15 in favour of Remain. So there's a much stronger groundswell of opinion towards Remain here than there is in mainland UK. And of course there's regional differences in the UK as well. But I think the localised issues will be related around currency, whether there are any implications for interest rates as well. And I think the Treasury are producing a paper with regard to possible risks to interest rates on this over the coming few days. So I think that's what Gibraltar will focus on, because that's clearly going to be important for the continued success of the Gibraltar economy. And one of the things that we've been very encouraged by is the strong performance that we've seen in Gibraltar recently. I mean, it's comfortably performing well ahead of the mainland UK. The growth rates are some sort of 2 or 3 times that of the UK generally. So that's very encouraging.